Hooty hoo, all my stock market gamblers. Welcome today. It's Thursday. I'm Tall Mike. What's going on in the stock market? Stock market's down a little bit, about 200 points on the Dow Jones. There's still a couple hours left in trading. We'll see how it plays out. I still have on a small short position. I'm keeping that short position on. I do think the market's going to come down. Now, I think it's going to come down because we've had this short squeeze. This short squeeze was a powerful rally, rallied up. We're down about 5 or 6% from the all-time highs on the S&P. That's not bad, but I do think we're going to come back down and retest the recent lows. The reason is that this short squeeze, or it could be called a bull trap by some, that traps people into the market right before the market comes back down. This short squeeze started with a gap up. Now, basically the market, it opened higher than the day's close and the market gapped up and then it continued to rally. Now, usually it will come back and fill that gap before it goes higher. We'll see if it does. I'm a speculator. I'm a gambler. I'm betting that it comes back in. That's my take on it. Okay, so let's move on to the real estate market. Real estate market's been exciting lately. Okay, there has been a shock to the housing market. Now, you're not going to hear about this for probably another month or two, but interest rates have just been going crazy. Mortgages. Okay, people are paying more and more for their mortgage because the price of interest is going up. We were 5 months ago, 3%. Now we're approaching 5%. But last week, it really took a hit. It rose almost a half a percentage point in 1 week. Now, a lot of people got hurt, and that's what I want to talk to you about. It's a shock to the housing market. Now, a lot of things have fallen out of escrow. A lot of people can't close their escrow. Why? Because they didn't lock in a rate and the rate went up a half a percent. Now they can't afford that higher payment and they have to back out of the transaction. A lot of transactions are falling out. Now you'll notice that for the last 4 months, pending home sales have been down. Well, I'm telling you, this trend's going to continue because they're going to be down because of these fallouts, because of the increase in the recent rise in interest rates. And now it's funny. Okay, it's fine. I know a couple personally. It's not funny for them. It's funny, like, I can't believe this happened to them. Now, some people, they consider themselves lucky. I have one friend. She's a gal that's buying a house up in the North Bay, and she's so excited that she just made it, that she locked in her rate and that she closed the house. She's excited, right? That she's all fired up. This is her investment for the future. Well, maybe that works. Maybe that doesn't work. I think some of the lucky ones are the ones that fell out of escrow, because what happened, yes, she got locked into the rate and she can afford the payments. But now the future buyers, they have to pay a higher rate, so they can only buy so much. So actually, her place has already gone down in value, and she doesn't even realize that because of the higher interest rates. As interest rates go up, houses go down because people can afford less. People don't quite grasp that concept. They're excited because they made it in. I made it in. I got the loan. I locked it in, and I closed on my property. Well, that's great, but now interest rates are higher and prices come down. Now, there's a general rule of thumb. For every 1% you go up, house prices go down 10%. Now, that's just a general rule. Doesn't hold true in all areas, of course. Real estate is a very localized thing. But here's the thing. Okay, so let's talk about, well, as I told her, I hope you're planning to stay in your property for a very long time, because it's going to be really tough for her to sell this 6 months or a year from now at the same price she's got. Now, I'm one of those that believe that house prices are going to come down 50%. 50%. Yes, I know a lot of you think they're going to go up from here. That's okay. My opinion is they're going to come down 50%. But let's say I'm wrong. Let's say they only come down 30%. Okay, let's think about this, all right? Let's talk about, let's say you've got $1 million property you just closed on today. Okay, now interest rates are heading higher and you're all happy because you got your new place. Well, let's say I'm wrong, and let's say 2 years from now that's dropped 30%. 30%. All right, so your $1 million property is now $700,000. Okay, I think it's going to be lower. lower, but let's say it's at 700,000. Okay, well, how long are you going to have to wait for it to get back to $1 million? I mean, you're going to have to wait, I don't know, 5, 10 years. I don't know if it'll ever get back to that level, but it probably will. Real estate over time usually does go up, but you could have waited and bought down here at 700,000 instead of losing 300,000 of your equity. You went from $1 million down to 700,000. Well, you waited till it got down to 700,000 and then bought there, and then over the next 5, 7, 10 years, it goes back up to $1 million. Well, hey, you just made $300,000 instead of like the other guy that bought here at the $1 million. Well, he's waiting those 5, 7, 10 years to get back to $1 million so he can break even, and that doesn't even include the closing costs when he goes to sell. So he's going to need to wait a little bit longer for it to get back above. Well, my point is, if you can hold off, I strongly suggest you do. Now, a lot of people, they can't hold off. They move from one location to another. They need to buy a place. Okay, I get all that. Sure, but if you can hold off, you might want to hold off. I mean, you just might want to wait because you're going to have opportunity. There is opportunities coming, and we'll talk more about how these opportunities can play out over time. I mean, there's going to be great opportunities. I mean, someone else's pain can be your gain. I mean, it's sad that it works that way. That's how it worked in 2007, 2008. During the great financial crisis, a lot of homes came down. There were people that paid $800,000. The home came all the way down to $200,000. And my friend bought one of those homes, and it's back to $500,000. He sold. He made $300,000. But the guy that bought at $800,000, well, he lost everything. I mean, he gave it back to the bank. Now, this is funny. Okay. Now, I know a lot of people think houses can't come down. So let's talk about what already has come down here. All right. Let's talk about commercial property. Now, I mentioned earlier how that Manhattan, the hotel, it was selling for, well, they bought it in 2014. They paid, they paid $750,000, and they just sold it for $380,000. They sold it half off. That was the Sheraton in Manhattan. Okay, but now this is really interesting to me. I get a kick out of this. I'm not really a commercial property guy, but I do follow it, and sometimes I get involved in a deal that involves commercial property. But there's a company called Blackstone, right? Blackstone is they're the largest commercial property owner in the United States. Well, now what's funny is they had this tower, this big 26-story tower, 26 stories, 600,000 square feet of prime Manhattan space. Now, they bought this tower. They bought this tower back in, I think it was 2014 also. They bought it for basically, what did they pay? I got it written down here somewhere. Okay, they paid $605 million. $605 million. All right, they paid $605 million back in 2014. They had a mortgage. The mortgage was $308,000. Mortgage was with Deutsche Bank. Okay, now Deutsche Bank may have sold this mortgage, but the funny part is the largest commercial property owner just gave back the keys. I don't know how a big 26-story tower just has a couple of keys. Maybe it does, but they handed back the keys and signed a deed in lieu of foreclosure, giving it back to the bank, saying, we don't want it anymore. So now the bank owns this property, 26 floors, right? What's the bank going to do with this property? Well, they're going to get rid of it as fast as they can because there's no tenant there. It's hard to fill a 26-floor office space right now, so they want to sell it. Well, what are they going to sell it for? They just took it back for $308,000. Of course, they'd love to get their money out. They'd love to get the $308,000, but I bet it sells for closer to $200,000 when they actually resell it to somebody else. I mean, this is the death spiral, right? But this is going to be opportunity. Now, I don't have $200 million to go buying that property, and I don't want a 26-floor office building. But this is going on all around the U.S. There were 2 office buildings in Chicago that just got handed back the keys on those, and those were over 1 million square feet. Look at commercial properties already down 50%. They may not talk about it. I mean, these are things like shopping malls. These are things like office buildings. These are things like big hotels. I mean, the tenants aren't paying the banks, so the banks, they don't know what to do. They're going, oh, crap, we don't want these properties back, but they're going to get them back because, just like Blackstone did, they're going to hand the keys back saying, I don't want it anymore. Now it's your problem. Look, things are changing in the real estate market, in the housing market. It took a big hit. it took a big hit when interest rates rallied. When interest rates go up they went up a half a point in 1 week, and that was the worst week of the decade for the mortgage businesses. But you know what? The mortgage businesses, it got even worse. We just came out with the numbers, and refis on mortgages are down 15% week over week. From that bad week, they already dropped 15% more. Well, it makes perfect sense. Nobody's refinancing at these high rates. They got a loan at 3%. Why would they do a refi at 5%? There's no way they would do that unless they're desperate for money. And there are people out there that are desperate for money. So some of these are doing refis. But the refi business has just crashed. It's really crashed. And soon, just the mortgages just to buy a home, that's going to crash because the homes are coming to a standstill with these higher rates. Like, there's a shock to the housing system. And you're not going to hear about this news. It takes a month or two before the mainstream media gets news of this. I mean, we're just getting February numbers and we're going into April. I mean, April starts tomorrow, right? And we're just getting February numbers. So you're looking at a month and a half. You're going to be hearing about this shock where people they fell out of escrow. They couldn't close their deals. They couldn't get them closed. So these properties are coming back on the market. I'm just pointing this out, that the market is changing. Yes, I do think we're going to have a big decline. That's what I think. Nah, it's just my opinion. I'm just a guy with a computer. That's all. I got a microphone. I love talking with you guys, by the way. So everybody that gives me a thumbs up, I really appreciate it. I do. I thank you for watching. Get out there. Have a great Thursday. Anyways, hit the subscribe button so we can talk more if you like this stuff. If not, don't hit the subscribe button. I'm Tall Mike. We'll talk again real soon. I hope. Bye-bye now.